Scott Bauer, CEO of Prosper Trading Academy, is joining us because we want to take a closer look at GameStop. As I was looking at the highs of 483 back in January. I mean, when you look at what's been going on with the volatility, but are we seeing a little bit of a breakout for GameStop? How would you trade this?
So, Nicole, this is a situation where there is no rhyme or reason. There makes no sense whatsoever from a fundamental or a technical standpoint how to trade this. As a 30-year veteran trading a stock like this, there's really only one thing that I can hang my hat on, and that's looking at the math. And what do I mean by the math? I'm looking at what is the market pricing in for a move based on earnings here. What is the option market pricing in? And options, the way that options are priced, they're priced with a one standard deviation or 68% probability. The option market right now is pricing in a move of about $65 on earnings today, over 20%. I mean, it's ridiculous. So is that up or down? Is there something technical or fundamental that's going to make it go up or down? No. So all I can do is make a trade based off of that. And that's exactly what I'm going to do. I am going to sell next week, not this week, but next week's June 18th, 210, 200 put spread. I'm also going to sell the 390, 400 call spread. It's called an iron condor. And basically what I'm looking at is for the stock to remain pretty much between 200 and 400. The break evens on this, if I sell this at $4, are 206 and 394 for next week. Now, if we get a massive breakout one way or the other here, sure, I have risk here, but my risk is 100% completely defined because I'm using spreads on both ends here. Other than that, honestly, I couldn't tell you the best way to trade this. And again, I've been doing this for 30 plus years without just closing my eyes and saying, yep, the WSB people and all the Reddit people, they're going to keep pushing this thing, or people are going to come to their senses and they're going to hit the stock a little bit.
As someone who's been doing this for decades, you talk about when you look at these meme stocks, they're just so different than regular trading, right?
They are.
Tell me a little bit about that. I mean, when you look at these stocks, I mean, you looked at GameStop today, but I know you've been watching all of them. I mean, Clover's been crazy. AMC's been a big story. Scott, I mean, what do you think of this action? Nothing like what we've ever seen in years past.
No, it is absolutely outside of your typical traditional type trading. And Nicole, you and I had a conversation yesterday about the skew and what's going on across the marketplace here with these big out of the money options, both on the call side and the put side. For example, this morning in Rocket, RKT, there's an opportunity out there. Okay, there's an opportunity to look at options, and I'm looking at July options here, where there is such a massive volatility skew from at the money to out of the money options, almost 50%. Unprecedented, absolutely unprecedented. So as a longtime vet, what do? I'm actually buying the option, which is much lower with implied volatility, selling the one that is just completely overpriced. That's what I have to do. That's not how some of the new traders do it. That's not how some of the maybe the day traders that Michael was just talking about do it. That's the way that I do it, because fundamental analysis of how options work does work over time. And when you see these abnormalities in the marketplace, they do come back in line. Now, we don't know whether volatilities in this type of trade is going to come back in line tomorrow, next week, next month. They will come back in line. That's how I've been successful trading, and that's what I'm sticking to.
Right. Scott, great to chat with you again. Thank you so very much. Scott Bauer, CEO, Prosper Trading Academy.